on to talk about types of farm accounts. We talk about farm records. Now we want to talk about farm accounts. The first type of farm account is the sales account. It is also known as the sales and receipts account. This account shows the details of farm produce that are sold. Okay, we sold 200 layers yesterday. Then we sold this amount of vegetables. We sold this, we sold that. So this sales account contains everything that was sold, including the type of produce, the quantity, the date sold, to whom it was sold, and at what price it was sold. That's what the sales account contains. Then the purchase account. This is also known as the purchase and expense account. It shows the detail of everything that was bought or purchased on the farm. So it also shows the date it was purchased, the quantity, the name of the inputs, the cost at which it was purchased. So that's what the purchase account shows. Then the next type of farm account is the profit and loss account. It's a type of account prepared at the end of a business period, usually a year, by the farmer, with the purpose of knowing whether his business is making profit or is running at a loss. So it shows both the profit and the loss that they have made at the end of the year. All expenses and purchases are listed on the left-hand side, or the side that is called the debit side, while the receipts are raised on the right-hand side, which is called the credit side. Now, the closing valuation is also on the right side, while the opening valuation is on the left side. Profit is added to the left-hand side, and the loss is added to the right-hand side. So this is an example. Example 1. Prepare a profit and loss account for Shegun Farms for the year ended 31st or 31/12/94 using the following data. Okay, this is a farm account. Wants to prepare a profit and loss account. This is what happened on the farm. So someone wants to prepare a profit and loss account to see whether he has made profit or loss. So it shows the cost of feed at 500 naira, cost of drug 200 naira, sales of egg 2000 naira, egg for domestic use 200 naira, loss due to mortality 300 naira, value of stock left 600 naira, farm wages 400 naira, sales of spent layer 1000 naira, transportation cost that's 300 naira, depreciation 200, electricity bill 300 naira. Then the last one there is net profit 1600 naira. So how do you do that? This is the solution. Now this is the debit side and this is the credit side. So you first put your serial number, then the particulars. Particular is the details of the money you are recording. Then the naira and kobo. That's for the debit side. Then you do the same thing also for the credit side. So in doing farm profit and loss accounts for the farm, the items you were given were numbered. So when you follow it accordingly, you use that number for each of the items when you are putting it on the account. For instance, net profit is XII on the question. So that's the same way when you are bringing in net profit on the account, you also put it as XII. That's why you have the serial number. It doesn't have to follow the order, because some may be on the debit side, another be on the credit side. So you have to really note that one. So now, debit side, you put everything that was bought on the debit side, or everything you spent money on. It's only things that you sold out that you put on the credit side. Now, look at it. The first one, cost of feed, you put it there. Cost of drug, you bought that one too. Then loss due to mortality, that was a loss. Like you lost that money, you also put it there. Farm wages, you paid that one to your workers, you also put it there because you spent money on it. Transportation was the money spent out, you placed it there. Depreciation, okay, this implement was of a higher value before you used it, now it has depreciated by how much, you put it there too. Electricity bill that you pay to the electricity company, you also place it on the debit side of the profit and loss account. So you now sum everything. By the time you sum this money, you have 2,200 naira. Then remember in the question you were told of the net profit that you have. That's the money that you have at hand. So you also put that on the debit side. So when you add it together, you have 3,800. Now for the credit, those are the things that you sold and collected money from. So you place them on the credit side. You have sales of egg, 2,000, egg for domestic use, 200 naira, value of stock left, 600 naira, sales of spent per year, 1,000 naira. So when you sum everything together, it is 3,800. So you see that it is balanced. So the farmer knows that he made a profit of 1,600 naira. The next type of account we'll be looking at is the balance sheet or the net worth statement. The balance sheet shows the capital or the financial position of the farm at the end of the accounting period, usually a year. Then the balance sheet also contains the list of assets on the right side, the list of liabilities on the left hand side. It is concerned with the value of assets that will remain if the farm business was liquidated and all outstanding claims against the farm paid. That is, for instance, let's say we want to close down a farm and the farm wants to settle everybody is owing, then he wants to settle all bills, then he wants to know what value does he have as a farmer. For instance, okay, this tractor that I bought for 250,000, how much does it worth now? After I've used it for 10 years, okay, let's say it's now worth about 450,000. So if we sum up all the values or the worth of his implement, then after settling every bill, what is left? That is what balance sheet looks into. That's what that last bullet means there. Then this is an example of a balance sheet. Sherwood Farms balance sheet as at 31st December 1994. So you can see the liability on the left hand side while you have the assets on the right hand side, then the liability on the left hand side. Now you have loan from Agri 3,000, loan from commercial bank. So you just have the assets and the liability just to show you what you have on the balance sheet, the liability and the assets. The liability being on the left hand side. The liability being on the left hand side. So you see it on the left hand side while you have the assets on the right hand side. And at the end of the day, you see that there is a balance. That's one thing about account, it has to balance. The total is 7,000. The total of the liability is 7,000. Then by the time it checks the cash at bank with every asset it has and removes it from there, then the money remains. The total asset is 10,000 naira and the total liability it has is 7,000 naira. So deducting 7,000 from 10,000, it has 3,000. So that's what made the account to be balanced. Now we'll move on to talk about marketing of agricultural produce. Activities involved in the flow of goods and services from the farmers or the producers to the final consumers. So when a farmer produces his goods, how he gets to the final consumers from the farmer is what is involved in marketing of agricultural produce. You know, when the farmer produces, let's say, 10 trailers of cassava, how does it get to you, a consumer? That is what agricultural marketing is all about. It involves all the activities required to move farm produce from the producer, that is the farmer, to the final consumer. It includes the selling of farm inputs to farmers or purchasing of farm inputs such as seeds, fertilizer, disposal of agricultural produce to the final consumers or users. Okay, the farmer wants to produce maize. He goes to the market to buy maize seed, get fertilizers, get chemicals to destroy insects or pests that want to affect such plants. That's where the cycle starts from. Then he gets to plant. After the plant germinated and he harvests them, then he starts to sell them to the last person that will consume the maize. That is what marketing of agricultural produce involved. So what importance does he has? Importance of marketing agricultural produce. First, it helps to make profit available throughout the year. As goods are being sold, the returns is coming to the farmer. Then the next is that it creates employment opportunity for many people. Marketers, we have marketers all around who that sell things in the market. They are benefiting from what the farmers produce, so there is employment created for such people. Then it also helps to locate where there are surpluses of produce and bring them to where there are shortages. For instance, there are surpluses of produce in the rural area, so we bring them from the rural area to the urban area where they are in shortage. Then it helps to export agricultural products and provides foreign exchange to the nation. Okay, we produce cocoa in Nigeria, we need to send it abroad. So it helps to take our produce to another country, then brings back money to our nation. It helps in price determination. Okay, this is the price of this particular good now because this is what we find out from the market. So it helps to determine the price. It also helps the producer to know the taste of the consumers because it's in chain. You will see the chain very soon now. The consumer will give the retailer feedback. The retailer gives the wholesaler like that till it gets back to the farmer that, oh, that particular maize breed was not too okay, it's sour, is this, or it's very good, okay, we like it, we want more of it. So the farmer gets to get a feedback of what the customer experiences. Then the next is that it ensures good research into products preferred by the consumers. Okay, once the farmer gets a report that this produce that he has now is very good, is very wonderful, so he will look into how he can produce more and make his consumers more comfortable. The last importance I'll be talking about, importance of agricultural marketing, is that it helps in the provision of infrastructure such as road, electricity, pipe-borne water, and the likes. Once goods are being transferred from rural places, they will definitely have to have a good road. Then the money that is generating will make